Welcome to Simple Investing Secrets, your go-to source for investing tips, stock recommendations, and strategies for creating financial freedom. In the video you're about to watch, we're going to delve deep into our ultimate guide to the top 10 safe dividend stocks for steady income. Whether you're a seasoned investor looking to fortify your portfolio or a beginner eager to learn the ropes of dividend income, stay tuned as we break down these reliable income generators. So before we start, we kindly ask that you like this video and subscribe to our channel for weekly updates. Also, check out the link in our description section to see how you can get up to 15 free stocks to add to your investment portfolio today. Let's get started. In this market, it's understandable if you're a little jumpy. Inflation is up, returns are down, and retirement accounts are taking it on the chin. There's probably nothing that would make you feel better than some safe high-yield dividend stocks to buy. Even though there is no such thing as a sure thing in the world of investing, you can significantly increase your chances of success by making investments in equities that are reliable, high-yield dividend stocks. Some of the safest investments you can make are dividend stocks. Dividend stocks offer a unique advantage in the world of investing. They not only provide you with a steady income stream but also offer the potential for exponential portfolio growth. This income can come in the form of monthly or quarterly payments, which when strategically reinvested, act as a powerful catalyst for expanding your wealth. Imagine this: as you receive those periodic dividend payments, you have the choice to reinvest them back into the market. This reinvestment is like planting seeds in fertile soil. Over time, these small additions can compound, leading to a snowball effect of wealth accumulation. It's akin to watching your investments work for you, compounding your returns as your portfolio grows. Furthermore, this reinvestment strategy is often referred to as dollar cost averaging, a proven method that helps mitigate the impact of market volatility. By consistently reinvesting your dividend income, you're essentially buying more shares when prices are low and fewer when prices are high. This disciplined approach can help smooth out the peaks and valleys of your investment journey, ultimately positioning you for long-term success. In essence, dividend stocks not only pay you for your loyalty but also empower you to harness the magic of compounding, creating a path towards achieving your financial goals and securing your financial future. So whether you're aiming for a comfortable retirement, saving for a major life milestone, or simply building wealth over time, dividend stocks are a valuable tool in your investment arsenal. With that said, let's review our list of our ultimate guide to the top 10 safe dividend stocks for steady income. Number 10. UPS, ticker, UPS. UPS provides transportation, logistics and related services domestically and internationally to consumers and businesses. The shipping company pays its quarterly dividend in March, June, September, and December. In 2022, the quarterly payout was $1.520 per share, a 50-cent increase from the 2021 dividend. UPS has increased its dividend annually for the last 13 years. Number 9. Pennant Park Floating Rate Capital, ticker, PFLT. Pennant Park Floating Rate Capital, a little-known business development company, is the second high-yield dividend stock I think is one of the safest to buy right now. Pennant Park is parsing out one of the juiciest yields on this list, 10%, and has been paying a steady monthly dividend of $0.095 for more than 7 years. BDCs predominantly invest in middle-market companies, those with market caps of $2 billion or less, and either focus on equity or debt. Although Pennant Park's $1.16 billion portfolio consists of $154.5 million in various common and preferred stock positions, the bulk, 87%, of its investments are tied up in corporate debt. Why the debt of middle-market companies? First of all, smaller businesses usually have fewer choices when it comes to accessing the debt or credit markets. Consequently, investors holding middle-market company debt enjoy a substantial yield. By the close of August, Pennant Park boasted an impressive 10% weighted average yield on its debt holdings. Also, 100% of the debt in Pennant Park Floating Rate Capital's investment portfolio is of the variable rate variety. With the Federal Reserve rapidly raising interest rates to counter historically high inflation, the yield Pennant Park is netting on its more than $1 billion in corporate debt is increasing. At the end of June 2022, the company's weighted average yield on its debt investments was 8.5%. As noted, it's now 10%. Higher rates are a great thing for this company. Further, it's important to note that Pennant Park has almost exclusively purchased first lien secured debt. All but $0.1 million of its $1.01 billion is first lien secured debt. First lien secured debt is first in line to collect in the event of a bankruptcy. By choosing to invest in first lien secured debt, Pennant Park has greatly reduced risk in its debt investment holdings. Number 8. Antero Midstream, ticker AM. This exceptionally safe ultra-high yield dividend stock that investors can buy right now is natural gas stock Antero Midstream, which checks in with a rock-solid 8.2% yield. Similar to Enterprise Products Partners, there might be some leeriness among investors about trusting energy stocks following what happened in 2020. But as its name implies, this is a midstream energy company. It primarily provides gathering, compression, water delivery, and natural gas processing for parent company Antero Resources in the Appalachia region, specifically the Utica and Marcellus Shale. The single best reason to buy Antero Midstream is that 100% of its contracts are fixed fee. This means the company is completely protected from inflation and can accurately predict its annual operating cash flow. Having this transparency is what allowed the company to pull the trigger on a $205 million deal in September to acquire gathering and compression assets from Crestwood Equity Partners in the Marcellus Shale. Another factor working in Antero Midstream's favor as well as Enterprise Products Partners, for that matter, is that the global energy complex is a complete mess. The pandemic led energy companies to dramatically reduce their capital investments. When coupled with Russia's invasion of Ukraine earlier this year, there are clear supply concerns as energy demand ramps up. This scenario could lead to sustainably higher oil and gas prices, which would encourage additional drilling and boost demand for energy infrastructure. This is expected to result in $200 million in added incremental cash flow by mid-decade. Number 7. San Juan Basin Royalty Trust, ticker SJT. San Juan Basin Royalty Trust isn't an investment that is on everyone's radar. Maybe that's why we like it. Or maybe it's because of the solid payout record. San Juan Basin Royalty Trust owns royalty interests in oil and gas properties in the San Juan Basin of New Mexico. It pays out royalties in the form of distributions, which can be really attractive when oil prices are high, as they have been recently. Despite a recent pullback, SJT stock is up 69% so far this year and it has a monthly dividend yield of 14.4%. Earnings for the second quarter included revenue of $13.72 million, up 81.4% from a year ago, and a profit margin of 97.2%. Number 6. CVR Partners, ticker UAN. CVR Partners is a master limited partnership in the fertilizer business. As the price of fertilizer spiked this year following Russia's invasion of Ukraine, UAN stock has been the beneficiary. At one point in 2022, UAN stock was more than $177 per share and showed gains of over 110%. But even with a recent pullback, CVR Partners is still showing a gain of over 55%. And the war in Ukraine shows no signs of letting up. CEO Mark Pytosh told analysts in August that war tensions will likely keep prices of fertilizer elevated for the rest of the year. Earnings for the second quarter included revenue of $244 million, which was up 76.8% from a year ago, and earnings per share of $11.12. Currently paying a 16.4% dividend. Number 5. Arbor Realty Trust, ticker ABR. Arbor Realty Trust is a New York-based lender that handles direct lending services for multifamily and commercial real estate. It handles everything from Fannie Mae and Freddie Mac loan programs, FHA and low-income loans, bridge loans and more. Earnings for the second quarter included revenue of $94.26 million, which was better than analysts' expectations of $82.38 million. Earnings per share came in at 52 cents, better than the 43 cents that the street was expecting. And to top it off, ABR stock offers a whopping dividend yield of 12.7%, which helps take the sting off the stock's year-to-date loss of more than 30%. Number 4. OneMain Holdings, ticker OMF. OneMain Holdings is one of the largest personal installment loan companies in the country. It is based in Indiana. It focuses on helping people with low credit scores, which may be more common now that the country is dealing with high inflation and the possibility of a recession. However, the market hasn't been kind to shareholders in recent months. OMF stock is down 33% so far in 2022, including a drop of 12% in the last 3 months. OneMain's earnings in the most recent quarter, Q2, came in at $1.04 billion, which was less than the $1.05 billion that was expected. Earnings per share of $1.87 missed analysts' estimates by a dime. However, OneMain takes the sting off that performance by offering a solid dividend yield of 11.8%. Number 3. Genco Shipping and Trading, ticker GNK. If you have been following the global supply chain and shipping issues that have been prevalent since the onset of the COVID-19 pandemic in 2020, then you likely have an understanding of the significance of Genco Shipping and Trading. The company provides dry bulk transportation services for shipping grain, coal, iron ore and other commodities around the globe. It owns a fleet of 44 Capesize, Ultramax and Supermax ships that it rents out for more than $27,000 per day. That provides some solid cash flow for shareholders. Earnings for the second quarter included revenue of $105.3 million, beating expectations of $103.88 million. EPS of $1.10 was less than expectations of $1.17. GNK provides an outstanding dividend yield of 14.8%. Number 2. Artisan Partners Asset Management, ticker, APAM. You may think of this as another one of those under-the-radar picks, but we've had an eye on Artisan Partners Asset Management for a long time. In fact, it was on our list of top dividend stocks to buy for 2022. The Wisconsin-based company provides investment management services, primarily to commercial customers. It has more than $120 billion in assets under management and maintains offices in major cities in the US and around the world. With revenue of $251.4 million and EPS of 79 cents per share, the second quarter's earnings fell just short of analysts' expectations of $253.82 million and EPS of 85 cents. As of January of 2023, the corporation's dividend yield was 13%. Number 1. Southern Copper Corporation, ticker, SCCO. Southern Copper Corporation produces refined gold, silver, copper and other precious metals, with its primary operations being in South America. It operates as an indirect subsidiary of Grupo Mexico SABDA CV. While the prices for some precious metals fall in a rising interest rate environment, many metals are critical to manufacturing. The demand for gold is expected to grow by a compound annual growth rate of 3.1% between now and 2026. Southern Copper Corporation stock is down 21% on the year, slightly worse than the Dow Jones Industrial Average, but slightly better than the S&P 500. The performance is certainly in the middle of the pack. But commodities give investors some basic security, especially in a tough market, and they are a good way to spread out a portfolio. The current dividend yield is 8.5%. This concludes our ultimate guide to the top 10 safe dividend stocks for steady income. Which of these stocks would you consider adding to your investment portfolio? Let us know in the comments below. Don't forget to click the link in our description section to learn how you can get up to 15 free stocks to add to your investment portfolio today. Get your free stocks now by clicking on our special link. As always, before you spend your hard-earned money on buying stocks or investing in the market, you should always make sure that you have done all of the research and analysis that is necessary. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.